Bitcoin, right now, it cannot shake the gravity of the CME market gaps as we're staring the ghost in the machine where the double top is actually threatening to take us lower to the 90,000 level. But we got to be prepared. We have to be prepared because Bitcoin actually just went through the biggest cleanouts since we've seen since 2022. Potential cycle bottom, future liquidations wiped out billions, price dumped below 100,000. But there's a twist to it all. There is a twist to it all. JP Morgan says Bitcoin is now cheaper than gold on a volatility adjusted basis. Right now, it's the same move that scared retail out of the markets has set the stage for potential huge institutional accumulation. So today we're going to break it all down and why this deleveraging might be the reset that Bitcoin needed and where the smart money is positioning. Welcome back, Crypto Crew. It is your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. All right, let's get right into it. Okay, what are you talking about, Tom? This is like crazy. The marketplace is, actually threatening to come into the 97,000, 92,004. And we're going to get into all that right now. So let's just start with the scoreboard as it stands right now. Bitcoin's trading right around 100,000, down roughly 3% right now on the session. The intraday high was 103. Let's get over to the short-term chart because we marked that stuff out for you on the short-term chart. We said there was resistance right here at 102,399. We went up to like what, 103 or something? No, we went up to 102,496. So the intraday low right now has been what? Where is that intraday low? 99,260. Woo. All right, so we got Ethereum holding near 3,200. It's down 5%. Intraday high was 3,004. Intraday low was 3,000, like 197, something like that. The broader market is totally red across the board. The total crypto market cap down about 2% in the last 24 hours. Altcoins are feeling it the hardest, except for one, Zcash, ZEC. It's the only major coin up double digits, and I'm going to tell you why I think I'm going to get into this new all-time high here. That has nothing to do with ZEC, but right now ZEC itself was the one that is the only one that's up double digits. It's up 20% on privacy coin rotation. And I'll hit that angle later on, but let's talk about the real elephant in the room, Bitcoin itself, and what the heck is going on. Well, we got the CME market gaps that are acting as gravity. There were open wounds on the chart. We made the top at 126, and now we are retracing back and testing the potential test to the CME market gap. Yeah, it's pretty ugly right now. It has been a sell the rally type of week, really. There are some buy weeks and there's some sell weeks. This was definitely a sell week. Let's see if we can shake it off over the weekend. The only way that we can actually do that is if we recover over 106, or else we're going to be in some deeper retrace, and you're going to need some help, guidance, so you know what to do, right? Get into our pro group. We'll help you out because it's going to be difficult trading right now. It is going to be difficult. It's not just buy and hold type of stuff. You got to be really nimble with this. But the double top that we've been, talking about, the ghost in the machine, is giving us some troubles, okay? The only way that we could shake this off is if we can recover over 106, or we're going to get smashed down. Okay, and good old Tom's going to be singing the drawdown song, the Ed Sakota drawdown song if we hit 90,000. I really don't want to sing that song, but hey, it's on the table right now. All right, now I'm not saying just go sell everything. I'm not saying that at all. When I'm going to take you through a scenario that probably going to be another type of scenario that you're not going to hear anywhere else, and so why you come to this channel basically to get like an overall view and a macro view, and just don't talk about Fibonacci here and whatever they talk about on the other channels. But really, the double top, will be confirmed only if we smash down to like 90,000. Now, there's a thin line between rally and ruin Really, it's the 106. If the bulls fail here, okay, if they give up, we could cascade to 90,000. It's not guesswork, it's structure, and the structure dictates the flow. Right now, I'm going to take when I get through when we go over to the short-term chart, we're going to go walk you through it. We're going to look at the structure. We're going to figure out exactly what needs to hold, what needs to break in order for it to give us a little bit of a relief. If you're a Bitcoin bull, if you are a bear, you're loving this. You are loving it, right? So you're short, you're making money, and you're looking for the push for good old Tom to sing at 90,000. All right. So right now. If we say we look at the Bitcoin short-term chart right here we are on our infamous 2-hour chart. Okay. Yesterday we said that we had to get above and close above and work above like 10233. Okay, from this bottom right here. Now this bottom sits at 98 right before the CME market gap itself. Okay, so that's like the last line of defense that we got before we plunge into that gap. Okay, and that would be pretty ugly as far as I think there's going to be a spike there. If it plunges in there, there will be a buy spike, but you still got to watch resistance, okay? Because the bears are defending the tops very, very strongly at this time. So as we're working through this, if we look at this low that we have here at 99, 98, the level is still the same. It's got to get above 102.5. It has to get above it. Okay. And then it's got to get above like 106. So we got a lot of wood to chop right now. Now, the main like level is at 98. That has to hold, or else we're going to dump into the CME market gaps. Okay. And then it's going to be wild, wild west. So therefore, you're going to have a plan. You better start planning now. Like, what am I going to do as a short-term trader if we drop into those levels? What levels am I going to look for to hold? What levels am I going to look to sell against to try to get to 90,000? You got a lot of stuff to think about over there. Now, we're not there yet. I'm not saying we're going to go there, but right now the market is heavy. It is heavy. So if we roll over to the good old Bitcoin, long. So let's just lock in the points. Okay, points. It's got to hold this 99, or else we could potentially test the 98 and drop down to the CME market gap at 97,000. Now, I would expect, like I said, I would expect a pop. If we came down into here, I would expect a pop, but you still got to pay attention to the upper level. At that point, the level to watch would be like 102.5, because then if it clears that means that was a complete like Wyckoff type of spring trade, and then of course you still got to watch the 106. All right, now. A lot of people saying it's over for Bitcoin. If we look at this chart, look at these tops, right? They're saying it's over. Same line, same rejection, right? Every cycle looks unstoppable until the momentum dies. Now, it's not broken yet, okay? But one more rejection, and we could see a fall begin. Now, if we look at this, all right, this is a weekly chart, 2 weeks, right? So it's really important to look at market structure. We got the high, we had the retrace, which becomes the low. Then we had the breakout, we had the high. Now we're floating down. Like, look at where this bottom is. That's that CME market gap. Okay. The only way that this thing actually shows a breakdown, and I've been saying it, is if you blow through this low, because the market structure is still saying that we're still okay. Now, of course, nobody wants to see it back. I mean, down in here would be like the gift of the year, right? Back down to the low that we had before we sprung up. That would be a unbelievable gift. Now, of course, we have to trade it when we get there. Just saying, So structure basically is saying this. Look, top, got the high, got the low, got a higher high. You need a breakdown through this to actually say, hey, the structure is breaking. It hasn't broken yet. Now, you say, oh, Tom, man, I trade short term. Yeah, of course, if you trade short term, then you got to pay attention to, this chart, the 2 hour. That's why you got to what? Get in a pro group. That's twice I mentioned it. All right. And I'm going to show you how to do that. But because we take the shorts, the longs, and you know, if you're a long-term holder though, you're not really in any trouble at all yet. Now, most of the long-term guys don't even look at this type of stuff. You know, they got long at, you know, 50,000, it's 100,000. They double their money. Okay, they're not really worried about it. Um, or some of the guys got long at 25,000. God bless you, right? So you're not really looking at it, but really, there are a lot of in betweens here. A lot of people think there's no in between. You know, break this, there's a breakdown, there's no in between. That's not true. I mean, right now the marketplace is, yes, it is under pressure. We can't deny that we're under pressure. So, you know, if we looked at, you know, this chart, we could say the top is not in. You know, 2021, its fake top looked just like this. Same trap, same fear, same disbelief. Retail gets out, and then the smart money rides the final wave up. Now we're not, you know, we got a lot of wood to chop. I'm not saying it's going to be easy, but markets can flip, and they can flip very, very quickly. You know, so we got to keep our eye on lots of different things. IBIT. Look, I mean, even like if you look at, you know, Zach. I mean, what the heck's going on with this? You know, but look at IBIT. Right, came right down to the supports holding. It's important. Okay, it's important. Now, so let's talk about this, and let's put it all in perspective. A good chart to look at as we talk about this is this: M2, global liquidity, gold, and Bitcoin. All right. Um, Look, the entire drop from 126 to sub 100,000 was driven by two forces. I think we could all agree on that. We had a massive liquidation in Bitcoin perpetual futures. These are leveraged contracts with no expiration date. Basically, traders betting with borrowed money. Now, when the price dipped, liquidation cascades kicked in, wiping out all the long positions and forcing further selling. Now, there was also 128 million hack on the DeFi protocol balancer, which rattled confidence in a broader crypto security layer. That's also why ZEC may be up. So that's their proxy for market leverage, right? At the height of the euphoria, the ratio was well above the average. Okay, so if we looked, this is what JP Morgan stated. The ratio of open interest in perpetuals to Bitcoin's total market cap was way above average. Now, after this correction that we're seeing, it's now back to the mean, now back to the average, right where it was since early 2024. Amazing. It's just amazing how markets work. I mean, it was a pullback down to the mean, right? That's an argument for like mean revision trading, right? But don't do it because look at long-term capital management. They blew up, right? Doing mean revision. Because the biggest corrections happen in the tails of a bell curve. So we're really at the mean right now. We're not really at a tail. A tail would be driving us back to 78,000. We would be in a tail of a bell curve. That would be where the biggest smash upward would occur. We're not there yet, right? Of course, right? But I'm okay. I'm going off on a tangent. But right now, if we look at the height of euphoria, the ratio was above average according to JP Morgan, right? So basically what they're saying is the froth has now cleared off the cup of coffee, right? Everything's settled down. So JP Morgan calls this a mechanical deleveraging. And according to JP Morgan, it's mostly behind us now. So JP Morgan's looking at levels to buy this. All right, that's the now. Could they be baloneying? Yeah, they could. They could be. You know, they could also be helping force, push the market down. But really, you got to look at BlackRock. You got to look at IBIT, stuff like that. So, while everyone's staring at the red candles, like institutions are watching one thing. They're looking for clean positioning. So now here's where it gets fascinating. If we're looking at gold, M2, Bitcoin itself. JP Morgan ran a comparison between Bitcoin and gold using a volatility adjusted pricing. They found that the Bitcoin to gold volatility ratio fell below 2. That means Bitcoin now consumes only 1.8 times the capital than gold. Now, gold's volatility spiked after breaking 4,000, narrowing the risk gap even further. So in relative terms, Bitcoin is now cheap compared to gold. I'll say it again. According to JP Morgan, Bitcoin is now cheap compared to gold. The same way undervalued currencies look after a massive unwinding. So now we're talking about Forex in here, okay? My baby. JP Morgan quantified it. He said with Bitcoin market cap around 2.1 trillion, its price would need to rise roughly two-thirds higher to 170,000 to match the 6.2 trillion in private sector investment in gold. Now, according to them, Bitcoin was overpriced last year. Bitcoin was overpriced relative to gold by $36,000. Now, JP Morgan says it's $68,000 too low. That's a huge sentiment shift from bubble to a discounted risk asset. And that's the core of like this institutional narrative that deleveraging creates opportunity. All right. So when volatility normalizes, capital rotation follows, especially from funds benchmarking volatility adjusted returns. So the right now the technical picture is: are we going to get the breakdown to the 90,000 before the reset, or are we going to start to slowly recover? Right. So if we pair the fundamentals with structure, Bitcoin's clinging, right? It's just holding on by both hands in its teeth to the $100,000 psychological level. It's testing the 50-week SMA, which acted as a springboard every cycle since 2017. The 100,000, 98,000 band is like the kill zone. If we lose it, we're going to open up to 90K. Unfortunately, that's what's going to happen. If we can potentially reclaim 106 and 108, that's our first confirmation of a reaccumulation phase. So volume profiles show heavy absorption below like 100, meaning large players have been buying into weakness. Exactly what you would expect post deleveraging. Now, with that being said, we can go and we can say, we know that Bitcoin loves to fool us before it flips. And like we've always been, we're a big fan of the good old, where's my rainbow? Where's my Bitcoin rainbow? Hang on one second. I got to pull that up. Here it is. Took me a little while to find it, but look, 12 years, we had the same curve. Every cycle ends the same in euphoria, not hesitation. We are really far from the red zone. So this is still, the smart money phase. You gotta, stack your coins smartly, and then you gotta get out when we get up at that top. Like, look at JP Morgan's even saying it should be worth 170,000. That doesn't mean it's gonna go there. Okay, it just means like, a lot of analysts are pointing in the same direction. Okay, so we got to be cognizant of that. You got to, get a game plan. All right, it's not the end of the world right now. It's just trading. Okay, if you're not, like I told you, it's easy to be a summertime soldier. Right? Market's moving up, you're long Bitcoin, everything's green. Everything looks great. All green lights in front of you, like you're just cruising down the road. Beautiful summer day. Well, guess what? We're in the winter. Okay, we're actually not even in the winter yet. We're kind of in the fall, right? So yeah, not as far as fall as like Bitcoin's concerned. I mean the season itself. So we got the changing of the season happening right now. Could we go into a winter? Yeah, if we break 75,000, we're going into a winter right now. But right now, just hang tight. Now, if we look at, we got to keep, look, you got to keep your eye also on IBIT, right? Very, very important to look at IBIT. And of course, this chart here is unbelievable with Zcash. I got the support right here, 593. All right, so we've got a lower top here. Not good, if we break down through this low, we could actually travel down to probably potentially, I would think, down into this area, 563. But we're not here to trade Zcash, right? So anyway, let's look at Ethereum, because Ethereum itself is mirroring the same pattern. Let's check it out. Let's look at Ethereum. All right, we got the massive monthly wedge that we're looking for the breakout takeoff with. Ethereum right now is hovering right at where is it? 3,000. 240 right now. It's got, clean structural support down at the 3,000. We sunk down a little bit lower, all right? Now, if we close below, I'm going to say if we close below 3,150, it's going to invite a slide down to the 2,800. That's just what it is. Now, we're holding right around 3,200. This is an important point for Ethereum to hold. It needs to really reclaim, of course, 36, 3,700. Now, it's not going to do that with Bitcoin dominance. It's just basically meandering, but Ethereum's offering a really, really unique opportunity to get Ethereum pretty cheap, right? So let's look at the next chart in Ethereum. Now, what we're looking at Ethereum to hold firm as and if Bitcoin can stabilize. It could lead the next rotation higher once the US dollar also cools off. Okay, so if we look at this chart, we see it. Maximum fear, it's the same signal, same result. Ethereum stochastic just flipped bullish, same structure as every cycle bottom, and the fear is loud, but entries are really always quiet, right? So it isn't the end, it is where, ignition can start to begin. So ignore the noise, just follow the data. You're going to need some help. Like I said, what do you got to do? Last time, get into our pro group. I'll tell you how to do it. All right, so let's look at Bitcoin dominance because this is the gorilla in the room. This thing is unbelievable. If we look at Bitcoin dominance right here, look at this. All right, it's flashing the same warning again. 2017 crash, 2021 crash, 2025 was the same setup. When Bitcoin hits 45%, the party ends. Right, altcoins explode. Before that moment, though, this signal never missed. So we got to be on top of things. Now, I want to show you something, all right? I want to show you something with Ethereum that's also can spark altcoins. So I'm going to take you over to a little chart I have, and also we're going to talk about Bitcoin itself, okay? I want to show you this. Although we're sitting with Bitcoin high as far as dominance is concerned, we got to look for like on-chain signals, okay? And the stablecoin supply on Ethereum just hit an all-time high of 184.1 billion. So that means what? It means that funds have entered the arena and they're just waiting for triggers. They're waiting for Bitcoin to stabilize. And then that's when the rotations are going to come. And you're not going to have time to react when it happens. I'm alerting you to this because it's very, very important. I'm going to take you to another chart. I'm going to show you Bitcoin. All right. We're going to put this chart right over IBIT right here so we can see it. This is important as well. Now, I'm not just singing upward, okay? I tell you got to get into the short term. We got to trade short. Absolute, not short. I mean, short term as well, okay? But if we look at this, all right, itself, as Ethereum is actually waiting for rotation and triggers, look at what's going on with Bitcoin itself, all right? Bitcoin supply is, in a loss, right? So right now, that means that money is starting to rotate. Very, very smart money is getting involved in Bitcoin. So what we're saying here is the supply loss is a launch signal. Every spike was in fear. It marked the next leg higher. Not tops, acceleration zones. So retail's panicking right now, understandably, because you're trading now up against some of the big boys out there, but smart money is loading. So it's not the end. It's basically an ignition point. That's what I'm going to leave you with before we jump into altcoins. All right. But really, as it stands, you got to keep these things into consideration. All right. Now, before we wrap up, I want to make sure you're well aware of our crypto trading community. It's right here in the link. Right here, you click this link right here. We're taken over to our Telegram trading community, completely free to join. Drop insane alpha trading opportunities daily. Hey, if you're into being a lone wolf, you want to trade alone, we offer 2 superior brokers. Very, very important to get a broker with low fees, fast execution. That would be WeX. BTCC, same thing. Now, each one is offering an incredible bonus. Sign up through our link on WeX, you get no fees for life. Sign up our link through BTCC, you get a $500 token giveaway, help you out with your account. But really what I would suggest is you level up your trading, you join our pro group right there. And really, let's stack the profits, the stories together, the short term, the long term. Let's just get involved. Let's just get involved. All right, let's move on over to our final alt section. We can't sugarcoat it. Alts are down. Most are down 3 to 5%, except for Zcash and Dusk Network. I didn't cover that one. I should have. But why? Well, because capital is always looking for narratives, right? And the privacy narrative, if you look at Zcash itself, the privacy narrative is like the only one that's not crowded right now. So basically, that's capital ran to them. That's a 20% increase, man. What a move. So Zcash pumped because of increased shielded transaction volume and a low float rotation while Bitcoin stalled. Okay. So from a macro angle, all right, as far as altcoins are concerned, got the stronger US dollar and the hawkish Fed keep the liquidity tight. ET outflows remain relatively small but steady. Now, IBIT itself, we got to keep our eye on IBIT. Let's get rid of this chart as well. We got to look at good old IBIT. Right now sitting right at a support at 56. We lose that, we could drop down to like 55, 54.90. I would think like 55 maybe. But we got to look for a recovery of IBIT. We start seeing a recovery in IBIT and Bitcoin is stable. You can be sure Bitcoin get ready to pop. So for traders like us, it's not a chase environment. Do not chase anything. It's a precision environment. Think sniper entries, not machine gun trading. All right. So we just got to stay on top of our game. All right. So here's the big picture, right? As we said, the deleveraging cycle in Bitcoin, all right, that drove Bitcoin down 20%, potentially could be finished as long as we hold the CME market gap. Volatility normalization makes Bitcoin look undervalued relative to gold, potentially setting up a 6 to 12 month upside window. It's a long-term play that we're talking about. But the market's tone is definitely still cautious. So we got discipline first and make sure you don't get that fear of missing out. So if you think like a pro, you'll see it for what it is, a liquidity reset, not a trend collapse yet. So this is when institutional money starts building inventory quietly. So what do you got to do? Well, you definitely have to come on over to X and follow us on X. Well, we talk about Bitcoin crypto all day, every day because we are cryptomaniacs. What else you got to do? Well, you can't chase candles. You got to read structure. Okay. Also, what else you got to do? Well, you got to trade with your head not over it. Don't